Good evening, everybody. This is part one of the S&P 500 for the calendar date of January. Everything that we said happened. Once we hit that bottom, which we knew that bottom was in, that we were going to rally on up. And we did. This is a daily chart right here of the actual movement of that S&P. Right now, every top that we hit had a major reversal. So, reversal 1, we rally. Reversal 2 was even more in-depth than we told everyone. Then we rallied up again. But on this particular one, we are in the monthly earnings, everybody. And everybody knows that all you have to do is go here and sign up and get busy with everything that we have done, every trade we have done in the earnings, the big price movements in earnings, after our earnings, and we give you trading capital to trade with. So basically 1, 2, 3 days. After that third day, we made this resistance level. And this is where, and I'm just going to show everybody, this is where, when we hit the high, I want everyone to know that this high was 2007 too. I also want everyone to know that this big short that we did, that this high was 2007 too. On 1/2/2015, high 2072, and we said there was going to be a good size correction on the indexes. And after they rallied, they did make a lower low here, and that's when we called the bottom. And that low was 1980, almost 100 points, about 94 points that the Dow also went with the S&P. But we're going to go down. And here's what I'm going to tell you right now. In the morning, we're going to gap down. Basically, the way I see it, with this major resistance level is that on 2009, which is tomorrow morning, we are going to gap down. And one of the things that I want to tell people is this is not year 2013. This is not year 2014. You heard what I said. It's 2015. And why is it? The volatility that I told everybody, all of our people around the world, and everyone in the U.S., that the volatility was going to be at extreme levels, and this is what we call a market maker's market. You day traders, well, hey, that's a different story. We're not day traders. We're market makers on both sides. So we're going to gap down, and we're going to come all the way back down. So when we come down through these daily movement averages, the white line is the 50-day, the blue line is a 10-day, and then the red line down here, and I'll show you more in depth on this particular move. And I'm going to show that it's a triple major top on S&P for the year. And here's where our moving averages are. This is the daily format as of tomorrow morning, and it was a time to get short on Friday. It wasn't a real big markdown for the S&P on Friday. We only were at 2055, but we're going lower. And basically sell the news. And the volatility is here to stay on this S&P 500. And the earnings season is winding down, which it is. And it's been a good volatile month for the bear. The bear got paid. Also, the bull got paid. We have before us a weekly chart on the S&P 500. And the minute that the S&P hit this blue line, everybody, that is a 40-week moving average. I said 40-week. Now, when we went into the closing end of the year, you could clearly see the following. And I'm going to tell you what it's going to look like. One of the things I'm going to talk about on this weekly chart, you got your 20-week moving average. That's the red line. This 10-week moving average up here is where that major wall of resistance. This here is the first 5 weeks of 2015. And I'm going to tell everybody we're going to be going considerably lower in these markets. It's a seasonality thing. And 2015 is not going to be that great to the bull. The bull does not know how to handle price volatility. And I will say below the marketplace, 1994.9 is going to be where we get that bigger support level. And what that really means is the 50-week right here. And it's rising, you guys. That's the bullish part of it. However, you need to understand the following. One of the things that we're going to talk about, this white line, is the 50-week moving average. The reason why these support levels for now have been holding is because of that rising 50-week. You have the blue line, and it too has been rising. That is why in the shorter time frame, we're going to have that short-term volatility. And I will tell everybody right now that 1961 on that S&P would be the following, and I'm going to show it to our trading staff. Here we go, everybody. This is our market maker platform. We came up to 1 delta. This is a market maker platform on the index. It's a yearly formula. Every year in January, we do the formulas. So basically, we came right up here to 1 full delta. Ratio is 1.00 from, and that was 84 points to that previous neutral area of 1994.99. Now, this doesn't lie. And there's been a lot of volatility to trade the S&P, call contracts, put contracts, the spider. This will never lie. And I'm going to tell people on the way down, we are going to go right here. Mathematics don't lie. 2058. And look at where the close was. Look at where that is, right up here. That is 3/4 delta. 0.75, $63 or 63 points above the neutral. So I'm basically telling you that the next support level is going to be a 1/2 delta. And a 1/2 delta in our market maker system is 2037.11. You heard what I said. 0. Right here, 0.5 is a 1/2. That's where we're going. And that's 42 points above the 1994.99. And this math will not lie. And you need to get in here. So that way you can take all the speculation and the would-ifs and all of that crap that people do in markets. It's a very sick behavior with markets, but that's what they do. Now, what I would like to show everybody, that 2026 is also 0.38, which equal a gain of 1.58% for the bull. The bull still has a gain. Not as much as it was or will be. We were up here at 3.69%, 73 points above the neutral. Now, I want everybody to know that we are going to come down to 1/8 delta. And that's only going to be 10.53 above 1994.99. We will not be wrong. I am telling you before the fact, not after the fact. And we're going to start Monday with the gap down. and you'll remember this video for the rest of your life. Now, we're going to show you another thing. Seasonality is everything to the public. This is not a public app, but you're going to be able to witness this. You're going to be able to witness it because what I am talking about at 1963 is minus 3/8, which would mean that we would have a close below the neutral. Remember, this is our number. It's an algorithmic, super high frequency in the HFT. We own it. We are high frequency. And we've been trying to tell the world that, but the world doesn't know how to listen. They never do. They don't listen until their wallet is broke. Ha ha ha. So basically, we're going to have support levels on the way down. And 0.38, that one there is going to be a 1.58%. Now, high frequency trading algorithms, what do? I can tell you what they do. They buy a basket of S&P 500 stocks that are taking those higher with the supercomputer. It's not a human being. And you got to know where the math is, man. So, at 1994, the S&P is not down and it's not up. The bull and bear are rubbing noses together right here, right now at 1994. And I'm going to tell you right now that when we break below this delta in our yearly formula, that's 2016.05. That's a 0.2. That's a quarter delta. And these markets were based on fractions, believe it or not, in the old days where I come from, around for 30 years. That never changed. You got to remember, back in the day or whatever, before they had the decimal, you need to know that 1/2 delta equals. The fractions are still there that are using the exchanges. And I built one of the first electronic communication networks back around 1996. 97, 98, called the top in 2000, and I have been able to do it every single time. I want you to be able to understand one thing. Our market maker program. There is no other market maker school. Come on. There isn't. It's all day trading crap. Day traders started coming in. We were one of the first people ever to be around. And we were. We were a So's bandit. Yes, we were. Small order execution system. I want you to know that every one of these earnings that we called, they're paying money. And they're paying a lot of it. What you need to do now, if you care about you got to care about, if you care about yourself, you'll hit the free trial. If you want to get trading capital, you'll hit open the account. I'm not going to go through a lot of it. You watch the videos and you watch the pattern day trading rule. You watch it all. You can get money and a lot of it. And I already told everybody, depending on who you are, we're willing to give you a lot of money. I'm going to talk about the long-term part of this S&P for the calendar 2015. We are at the very 6-year mark. A 6-year mark on a big move up like S&P and everything did with the high frequency trading algorithms, which they did do. And I need to say one more thing. If you want to learn about what I'm talking about, we made a movie. It's 1 hour and 20 minutes long. And if you go down here to HFT, high frequency trading courses, here's what you're going to find. You're going to find everything you need to know. Equity, indexes, everything. You do. You click on the link. It's called the Ghost Exchange. Why is it called that? Watch the movie. I'm in the movie. We hired actors in here. I called May 6th, 2010. I called the flash crash right at the very end of what was going to happen in these markets on 5/1 of 2010, and I got the live event. I was there. Nobody else was. And it's all recorded. And the Dow dropped 1,018 points in 18 minutes. And I was short that day. And you'll see my charts and everything talking about it. And then you'll have the actors come in. You're going to learn what they have to say. And we told them what to say about high frequency trading applications that those firms use. And they have ran the day trader out. This is why we call it the ghost exchange. Yeah, it is a ghost. Anyway, do that for yourself. One of the things that I'm going to show is that the S&P has gone up. We're in the 6th year, 2015. I'm telling everybody, when I called that bottom in year March 1 of 2000, and we were doing it in 2009, that we were going to have a tsunami rally. And that's how bear and bull markets go. I am telling everybody right now, this is the 6th year in 2015 that we have entered in this S&P. And I'm going to tell you seasonality. Seasons. We got 4 seasons in the year out here. And guess what? Markets have seasonality. But I'm going to tell you before the fact that this S&P will hit 1910. And I'm also going to go as far to say that in the summertime or whatever the case is, I am going to say that this market over the longer term is going to go to 1826, which is 2 full deltas. That there, the bear, would have 168 movement from the neutral right here. Okay, anything below that in the negative deltas, that's the bear side of everything. It's not going to do it in 1 day or 1 month, but it will do it at some point. And I'm letting everybody know that, hey, we went straight up here to full delta or slightly below it, 2072, just 6 points away. But I'm also going to say that you're going to go down the same distance in this S&P. And that would be a negative 4.22% in our system. I didn't say your CNBC. I didn't say anybody else's. No. This is the true drop from 1994. 1 delta down is 84 points. Of course, we're going to bounce at 1952 when we get there, and we will. But on the flip side, on the 1/2 delta, which is 2030.73, right here, that 0.5 equals 42 points, or 2.11%, that the bull is still there. However, when those support levels drop, they're going down. And the volatility in year 2015, people will not be able to handle it. This is a market maker's market. And there are a few people in the day trading model. Well, some of you make money. The majority of you, no, you do not. You will run with fear, and you will. But psychologically, when it's up here, you're loving it. Why do you love it up here? Why is it that people love highs? I'll tell you why. They're validating their entry on a stock or whatever it is. So when it's up here, I love it. Well, that's when I'm going short. When it's down here, I hate it. Oh boy, I'm going to run. Psychologically, that's what happens for you people, and always will. And I'm telling you the truth. And the reason why I'm telling you that is because we care about you. We care enough about you as a public individual that's in these markets is to make sure that you can join stockmarketfunding.com. And you can. And I'm just telling you, we're going to have a gap down Monday. Not a real big one. But these are going to be the trading ranges as we move through February and we move through April and May. We're going to have, look at, it's still possible because the bull's in control, but I'm talking about longer term. Shorter term, you're going to have these deltas and supports. I'm talking about 2015. And I'm also talking about that this S&P 500, by the end of the year, as we move through the summertime, seasonality, these markets are going to take a dump. And when I say take a dump, that's exactly what I mean. So right now, I'm going to leave the fact that three-quarter delta 0.75 here is $63 above. As we come down, of course, they're going to act as support level, no matter what. Stocks in the S&P 500, they will hold their bull side support level for a while, but they're going to come down. And I said down. And that's the end of the special 2015 market maker update. And for everybody out there, hedge fund managers, day traders, money managers, you people need to know one thing. High frequency algorithms are done with a supercomputer. And we want you to understand what you're up against on markets. This is the S&P 500, and good luck to every one of you.